Hello everybody and welcome. This is Tushar Chande. Welcome to a discussion of Breakout Buddy, my adaptive Donchian channel for TrendSpider. So we are going to take the standard channel and its two parameters of lookback length and offset and adapt them by market volatility, so we don't specify an exact value but a range of values for both. So on the right hand side you see that it's very easy to highlight trends, whether they are on the upside or the downside. So let's see how that works. The usual disclaimer: past performance is not necessarily indicative of future results, and there's risk of loss in trading. So this is the traditional Donchian channel. It has three lines. This line, the uppermost line, is the highest high over the look back period of 30 days in this case. The lowest line is the lowest low over the look back period, and the middle line is simply the average of those two lines. And then this offset tells us that we've shoved the whole calculation to the right by 1 day, or the number of days in the offset. And the offset helps us to clearly see a breakout. But because we are only offsetting by 1 day, the rest of this trend is getting masked. So let's see how we can improve on that. So this is the Breakout Buddy adaptive Donchian channel with the variable length and offset that's driven by the stochastic ATR calculation. So the green line and the red line are the highest high and the lowest low over a variable look back period, and the offset with which we are plotting the data is also variable. And when we have a breakout below the red line or the lower band, we are painting it red, and when we have a breakout above the upper band, we are painting it green. So just to make it easier to see the breakouts. So the Breakout Buddy is sort of an adaptive Donchian channel. So we still have two variables, the length and the offset, but they are variable and they're not fixed. And both adapt automatically to market volatility via the stochastic ATR calculation. And it's simply for trading breakouts more easily, and it can be used to scan and backtest and optimize, etc. within TrendSpider. So let me try to give you a intuitive understanding of how we derive the Breakout Buddy adaptive Donchian channel. So of course we have two parameters, length and offset, and somehow we'd like to vary these automatically. We start by calculating the average true range. The true range is sort of a measure of price movement, allowing for gaps between successive bars, and then we average it over a set number of days. It could be 10 days or 20 days or 50 days or any number you like. The challenge here is that the ATR has an open range. That is, the upper bound is not fixed. It could be 10, it could be 20 or more depending on what the prices are doing. So we want to convert the average true range into a fixed scale by using the stochastic calculation, which is a range location oscillator. So as soon as we apply the stochastic logic to the ATR, we get a fixed range between 0 and 1. So now we can do something useful with it. So we convert the stochastic ATR value into a variable length and offset, and then we are to push this into the price channel calculation. And let me show you some charts to help you visualize. So on this slide, I show you three objects. The upper panel has the daily data for QQQ. The middle panel has the average true range over 25 days. Observe that when the market was selling off into early April, the average true range increased quite steadily and spiked as it tried to make a bottom. And as the market rallied back strongly, the average true range declined very steadily and reached some low value. Now, the third panel down here, the blue line, has the stochastic value or equivalent of the average true range in the middle panel. So think of the stochastic as a range location oscillator. When the ATR is at the highest point in the past 25 days, you get a value of 1 or 100. That is, the stochastic value is maximum. When the ATR is at the lowest level in the past, say, 25 days, then you get a value of 0. So the stochastic is just telling you, is the current value near the top of the range or the bottom of the range over X days, and here we have 25 days. So this is what we've accomplished. If you observe here, you see the range is open. We go all the way from, say, 0 to 15, though of course you won't get an ATR of 0 ever. And down here we've got a range from 0 to 100, which is the same thing as 0 to 1. So we've basically taken an open scale or an open range and converted it into a fixed scale from 0 to 1. So now we take the next step. Again, we have the daily data for QQQ on the topmost panel, the average true range from the previous slide, the stochastic ATR from the previous slide, and now we've taken the stochastic ATR and converted it into days or length, since we're using daily data, using the computation where the green line is a variable length that varies from say 10 days to 30 days, and the orange line is the variable offset, which goes from 5 days to 20 days. Now see what happens when we had the big sell-off and the range is peaking, the stochastic value is also peaking, and so the opposite happens here. That is, the length of the channel is shrinking and the offset is shrinking. And then here, when the market rallies and is making new highs, the ATR is declining, the stochastic is at the low value, meaning at 0, telling you that we are at the bottom of the range, and so the equivalent variable lengths are at the highest values, and here it's at 30 and 20 because that's what I've specified. So this is a very important chart because it gives you an intuitive understanding of how we are adapting to market volatility. When volatility increases, the channel length decreases and the offset decreases. When volatility declines, the opposite happens. The channel length increases and the offset increases. So that's the key idea behind the adaptive Donchian model we're using. So this is a very important slide where we just want to check that our programming is okay. I've plotted the basic Donchian channel with 50 days and a 1-day offset, and then the Breakout Buddy channel with fixed value, that is 50-50 and 1-1. So the two channels should plot right on top of each other, and they do. So the adaptive Donchian has converged to the fixed parameter Donchian. And if you look here, you can subtly see some green shaded regions, and over here we have some subtly red shaded regions, just to show you that both the indicators are here. So that's good to know that the computations seem to be working as expected. So just a reminder, we can set the values for the min and max for the channel, the min and max for the offset, and whether you want to paint or not paint outside the channels. And of course, you can set any of the other colors for the scheme you're using. This is an example of a two-step scan or a two-condition scan. The first condition is we want to be outside the upper band, and then with the default values. And then the second condition is we want the chats, that's the Chandé absolute trend strength indicator, to be greater than 80. And I'm using daily data. This is what the scan showed. I've ranked them in descending order of the chats indicator. The first object is alphabet, and when I click on it, this is what it looks like. You see, we're in the green. We're definitely having a breakout. It's highlighted with the Breakout Buddy. And then the lower panel has a chats indicator, which is at 100. So this is telling you that we have a strong uptrend. This is a chart of alphabet, daily data, and I've superposed the PALS trailing stop. That's the parabolic accelerating long stop, or these brown dots. So you can see the green region from the Breakout Buddy, and then the trailing stop from PALS. So this is an example of using one as an entry and the other as an exit. And of course, you can combine with any other exit you choose. So we'll end with this summary. The Breakout Buddy adaptive Donchian channel is a primary application is trend following. It can be used on any time frame. So if you're a long-term trader, you could apply it on weekly data. If you're a short-term trader, you can use 5-minute charts if you wish. You can combine it with something like the chats indicator, which is the Chandé absolute trend strength indicator for confirmation of momentum, and the PALS exit, or the parabolic accelerating long stop exit. So this is primarily an entry strategy, and you need an exit strategy to go with it. You can combine it with the rune indicator or the stochastic RSI for additional checks. And of course, it's very simple to backtest or use as a scanning tool. Thank you for listening.